In this video, I want to go over the trial balance representation that I created in XBRL. You can find that information here or on my blog. You can find it. So this trial balance representation is a little bit orthogonal to the accounting equation SFAC6 and common elements. I kind of really don't need to do this for the purposes of proving that a logical system works correctly, because all this is more the same stuff and a lot of roll forwards that I'm using to test this specific thing. So it doesn't really add a lot to the testing of a logical system for general logical system, but it is important to understand how a financial report logical system functions. So I'm trying to make 2 points. Number one is to test all the roll forwards and make a point. You'll see what I'm talking about in a bit. And the second thing is to test the connection between the trial balance and the report, a financial report, internal or external. So this is more, it's kind of like looking like it's internal reporting focused. But so here's what's going on. So to the core, say elements, the common elements of a financial report, I added some line items now. Cash and cash equivalents, receivables, inventories, property, plant, and equipment, accounts payable, long-term debt. I already had, and I actually added retained earnings too. So I also added a roll forward for each of these accounts into the report. Okay. So here's the balance sheet. You can see the line items. And as accountants understand, each one of those line items has a roll forward. Basically, you don't necessarily work with things this way, but you could, and in fact, I think you kind of should. So here you see the account at the beginning of the period, and here that is at the end of the period. So again, tying it to the balance sheet. There's the beginning of the period. There's the end of the period, and these are the transactions that have affected that account. They're grouped by category. So I'm calling these things roll forward codes, because these are groups of transactions that all basically do the same thing. When you collect receivables, that's where the transaction would be grouped into. So I'm not going to get into that right now, but basically I created this roll forward for cash and cash equivalents, and also for receivables, for inventories, property, plant, and equipment, accounts payable, long-term debt, and retained earnings. So that's basically every line item on the balance sheet has a roll forward. So here is the trial balance with all of the so I had an accounting professor. The way he explained this is that these are the leaves. The items, the accounts that are basically your chart of accounts are the leaves. And the branches are the elements of a financial statement. So for example, assets. You have ones here that are assets, and you have ones that are liabilities and ones that are equity. And these are current assets. These are non-current. This is equity. And anyway, so these can be grouped by the branches. But this is just the raw information. And into these accounts go transactions. And this is a group of all of the transactions. So what I did is I took the roll forward and I removed the beginning and the ending balance, and I simply have a summary of all the transactions. And this works, and this works. It should be zero because you have debits and you have credits, and it adds up to zero. Here, transactions all add up to zero, and life is good. The point I'm trying to make, though, is this little interesting phenomenon. Not really a phenomenon, it's the way that accounting works. When you post a transaction, so suppose that you purchased inventory for sale for $2,000. There's the debit, and you have a credit. That credit, you purchase it on account. So purchase inventory for sale on account, and there's the credit. So the reason for this little 2 is that this is a different transaction code than this, because this is the purchase of inventory for sale that goes through the inventories account, and this is the other side of the transaction, the purchase of inventory for sale that goes through the accounts payable account. So I'm differentiating these 2 line items because the point I'm trying to make is that people building taxonomies get confused about whether they're putting this in the taxonomy or whether they're putting this in the taxonomy. And I created this to show that they're 2 different things. The second piece is, so here are the actual transactions that are grouped into these roll forward groupings. Okay? So these are basically, this is the journal entry. These are the journal entries, each one of these. And this is the ledger, general ledger trial balance. And this is the stuff that goes through the general ledger trial balance. And here is all of this represented in XBRL. So this is the same view I've had before. So here you see the balance sheet. And again, I have an income statement and another version of that income statement, another version of the income statement, a cash flow statement, statement of changes in equity, and I have all of these roll forwards, and everything ticks and ties and crosscasts and foots. And basically, this proves that this works. There's the trial balance. There's the transactions. And this is what this representation shows, that this is represented correctly. So I'm going to call that good. And I'll see you in the next video.